Welcome to another video with Invest with the Doctor. My name is Dr. Haider. I'm a emergency medicine doctor by day and an investor and a trader by night. In this video, I'm going to be talking about why you should be spending some time trying to understand what's going on in the world at the moment and what you should be investing in. Money is shifting away from a system that lacks full public confidence and into assets that don't depend on promises or policies. Gold is rising because trust in traditional system, faith in the dollar, global trade harmony, and economic stability is eroding. As belief fades, capital is flowing towards assets that don't default, don't tweet, and don't break. Some analysts are now warning of a potential double-dip recession where markets rebound briefly after a drop only to fall again, often more sharply, reflecting deep-seated economic and investor concerns. The probability of a US recession has climbed from 20 to 24%, with global pressures like Europe's debt troubles looming US budget cuts and slower growth adding to the risks. If these challenges persist, the economy may experience a second downturn. And this is not just US, the same is happening all over the world. Canada is suffering, Australia, UK, so none of these countries are getting any respite from what is going on at the moment. In such uncertain times, gold continues to shine, up 22% since Inauguration Day and 6% since early April's tariff news. Mining stocks like VanEck GDX have surged 41% over the past 3 months. After a brief dip in early April, both gold and gold miners are rallying strongly on renewed safe haven demand. Now this rise I showed you in my previous video of 41% on the VanEck GDX. And I also mentioned the GDXJ, the junior gold miners, which are also equally important. Markets are reassessing everything. Stocks are sliding across the board. Since the US elections, the S&P has dropped nearly 9% and the Nasdaq is down 17%. The latest tariffs are only adding to investor nerves, with valuations now under intense scrutiny. Nvidia, as you know, last week dropped quite a bit after its earnings. Why look at gold miners? So I think gold miners is one of the solutions, or something that you should have in your portfolio, because it can save you from the downturn that is present at the moment. Gold mining stocks offer more than just exposure to gold. They often magnify gains. When gold prices rise, miners not only earn more but can also boost profit significantly, as their cost typically stays stable. This leverage effect means mining stocks can outpace gold itself, offering compelling upside potential for investors seeking more than just the metal. So basically, if the gold price is going up, the gold miners are going to amplify your gains and your prices. Okay, so the gold prices are going to go up by quite a bit if the gold miners are going up. So this is the reason I made this video. I think it makes sense to be in gold miners at this time and not only in gold. So you should have gold and gold miners both in your portfolio. Now, there are certain stocks and certain stocks you should have in your watch list. So let me talk to you about them. And so the gold stocks I feel that would help you and the ones that I've sort of looked at, and some of them I own myself. So if you want to go for a portfolio that is high risk, high reward, so that is aggressive growth, you need to be looking at the stocks that I'm mentioning. These stocks tend to surge the most when gold prices rise, but come with high volatility. So one of them is Skeena Resources. Ticker is SKE .to on the Toronto Exchange. It's a high-grade gold exploration in Canada. The second one, and I hope I'm not butchering the name, is Osisko Mining, OSK.to, major gold project in Quebec with a big upside. Then you've got Harmony Gold, South African miner with a high leverage to gold prices. And IAMGOLD, IAG, mid-tier miner with ongoing expansion projects. Now, if you know anything from my previous tweets on X, I've mentioned Harmony Gold is one of my favorites. It's one of my favorite stocks, gold stocks. It's done very well and continues to do well. I think I like this out of all the stocks that I've ever mentioned or invested in. I feel the most potential is with Harmony Gold, ticker symbol HMY. The last one here, called IAMGOLD, ticker is IAG. I mentioned last week. I tweeted it on X. Did a sort of mention it in a TikTok video as well. And since the time that I posted, that the stock has gone up by 10%. I still believe it's got a good potential, even though it's gone down a little bit. It's pulled back, but overall, I like this as well. So the ticker is IAMGOLD, IAG. IAG is the ticker. IAMGOLD is the company itself. So this is for high risk, high reward, aggressive growth. Now, let's say you don't want to go into these kind of stocks which are high risk, because they've got upside as well as downside, so they can go down as well. So you would think about a medium risk, high upside, balanced growth portfolio. So medium risk with high upside. So these are more established companies with strong growth potential but lower risk than juniors. So one of them is Kinross Gold. The ticker is KGC. It's a well-diversified mid-tier gold miner. Then you've got Agnico Eagle Mines, AEM. They've got strong revenues, stable operations, and good cash flow. Then we've got Anglo Gold Ashanti, AU. It's a global miner with high exposure to gold prices. And last but not least on this list is Eldorado Gold, EGO is the ticker. It's a mid-tier miner with operations in Europe and South America. So you would look at this in investing in these stocks if you are worried about the risk of downside. So these are stocks which will not go down as much but will definitely go up with time, because most of these are very stable companies. So the last one that I wanted to talk about is if you don't want to risk because you're worried about how things are eventually going to turn out. In that sense, you can go with a low risk and steady growth. So it's a safe haven play. So low risk and a steady growth. So these are safer plays with stable cash flows and lower downside risk. So we're talking about Franco-Nevada, ticker for it is FNV, which is a leading gold royalty company with low operational risk. So this is not a miner, it's a gold royalty company. Please watch my last video if you want to understand what that means. Then we've got Wheaton Precious Metals, ticker is WPM. This is a streaming company benefiting from rising gold prices. You've got Newmont, NEM. This is the largest gold miner with strong dividends. And last but not least is Barrick Gold, ticker is GOLD. This is a well diversified, large scale producer with global mines. So these last two are very, very stable companies. They're big companies. Yes, they can, with all things, the prices can drop, but you're going with the sort of Newmont is the largest miner. And Barrick Gold is a well diversified miner. So I think these are companies that are very stable, and you would sort of be risking not much for a steady growth. So this is all I had to say for this video. Please do your own research. Look at which profile you fall into: low risk, medium risk, or high risk. And of course, your potential returns could be sort of dependent on what strategy you use. I hope this you found this video useful. I sort of try my best every day to post on X. In the description, you can have a look at my Twitter feed, and I'm mostly sort of on daily basis. I do one or two chart analysis of different companies. So if you get time, do subscribe to it. I think you'll find it useful. Also, I do small sort of TikTok videos which sort of emphasize some of the things I talk about here in detail, because not everybody has got time to listen to the details itself. So again, link is in the description. So I hope you can try and follow me on Twitter or X, and also on TikTok. And after saying all of this, thanks for watching.